Welcome to StockCharts, Tony. We're here talking about the OptionsPlay add-on for StockCharts. And I've got some questions I think you can help me with, and I think these questions will help anybody get going with that add-on really quickly. So as somebody from StockCharts, I really like visualization of data. And so the first thing that catches my eye when I look at the OptionsPlay add-on for StockCharts are these really interesting charts and graphs that you have with the two lines and the red and the green. What is that about? Help me understand those charts.
Yeah, those are what we call the options P&L charts. And what they give you is a visual representation of if you were to buy that option today and held it all the way through the expiration date, what are the possibilities of profit versus loss depending on if the stock were to move higher or move lower from where it is today. And it gives you a good sense for how much potential profit there is if the stock goes in the favor you expect it to, how much potential loss you have if it goes against you, and the ratio of the two. And I think that's really the best way to use those P&L graphs is to give you a visual representation of how much potential you can make versus how much potential risk that you are taking on that trade.
Okay, and so if there's like more red and green on it, then it's has higher potential but also higher risk. Is that kind of how it works?
Yeah, so what you're looking at is basically the ratio of green to red. You obviously want strategies that have more green and less red, but we also have what's called an OptionsPlay score that's actually designed to actually quantify how much red versus green there is, and it gives you a good sense for risk to reward.
Yeah, so I want to talk about that score. So I see like scores, some scores have red and some scores are green. And then some scores have like double checks or some. I think the green double checks are probably pretty good ones to look at. Is that right?
Yeah, so let's break down the score first. The inspiration actually came from playing poker. Because when you're playing poker, you have two things. You have risk to reward and you have probability of success of that hand. And you use those three metrics to gauge whether it's a hand that you want to play or you want to fold. So the inspiration is trying to give you a same sense for what is the expected outcome of that strategy if you were to play that same hand 100 times over, what is the average outcome of that specific hand so that you can get a better sense for whether you have a positive or negative expected value. So when we talked about before, the ratio of the amount of red to green on that P&L chart, when the red to green ratio is balanced, meaning you have an equal amount of red to green, you effectively have a score of 100. And we basically color code this for you to give you a good sense for whether you have any type of edge when it comes to trading this type of strategy, whether that edge is in your favor or that edge is against you. And it's color coded. So anything that's red means that you have an edge against you. Anything that's yellow means you have there's no edge in one way or another. And if it's green, that means you have some positive expected value. There's no bounds to the score itself, just like the way that risk to reward ratio technically has no bounds. We basically use the same type of methodology for our OptionsPlay score.
And then there's some checkboxes above the graphs. One says bullish, the other says bearish, and we've also got high implied volatility. It seems like things kind of flip, right? It starts out in bullish. It seems like they flip when I click on the bearish one. But it's not an exact flip. When should I use the bullish? When should I use the bearish?
Yeah, so if you look at the axis on this P&L chart, the x-axis is basically determining whether the stock moves lower or higher. So when you talk about going from bullish to bearish, well, we are flipping the strategies because we want now for the stock to move lower in order to make a profit versus in the bullish case, we want strategies that'll make money if the stock goes higher. So that's what we're flipping for. And the idea of the OptionsPlay tool is so that for any stock you pick out, you can have different outlooks. You can have bullish outlook, a bearish outlook, and for options traders, we have a strategy called high implied volatility, meaning what do you do when volatility is high, or how can you take advantage of the fact that a certain stock has high implied volatility today? So those are the three general outlooks that an options trader might take, right? Versus an equity trader, you're basically taking a bullish or bearish view. You can't take a view on volatility. But as an options trader, you can take a view on volatility to either believe that the current volatility environment is underpricing what future volatility is going to be, or if it's overpricing. And just as a general rule of thumb, option prices tend to overestimate volatility versus the actual historical volatility.
Okay.
So there is an advantage, theoretically, a statistical advantage to selling premium or selling options because of that implied edge that you have as a seller, which is why we specifically have a button for When implied volatility of an option is high, how can you take advantage of that?
Now, above the graph also is some advice, what appears to be advice. Buy 100 shares, buy this call, so on and so forth. How can I use that, and what should I do? Should I check anything else before I follow that advice?
Yeah, great question. So we built these 3 strategies where we tell you exactly what strategy to trade, what expiration date, what strike price, because most traders, and especially beginners, struggle with this, with this selection of option strategies, just because there's too many options. You pull up an option chain, there are hundreds of strikes across dozens of expirations. And that choice is only useful if you've already selected a strategy. A lot of times, most traders might not even know what strategy to choose if they have a specific outlook on the stock, which is why we built our tools in a way so that the only thing you need to select is a strategy and an outlook, and we'll do the rest. Meaning we're presenting you with 3 strategies that all are suitable for that specific outlook. So for example, if you're bullish on Apple, we're going to show you 3 strategies that you can all take for a bullish view on Apple, and they go from beginner to advanced. That's why we start with the 100 shares of stock to help any equity investor who's using this tool to better understand, if I was a stock investor, what would be my P&L potential. And then what we do is we look at a simple option strategy with buying a call option. And then the 3rd strategy on the right here is a vertical spread. And maybe you've never heard of a vertical spread.
Maybe I've never heard of a vertical spread.
Which is designed to help you progress as a trader, to go from something you understand today to something that maybe you're just learning now to something that you might want to learn in the future. And as you progress through it, there are advantages as you work your way through to the strategy on the right-hand side, where you're getting a little bit of best of both worlds.
So kind of the left side is the straight ahead, relatively safe lane kind of thing to think about. Middle has some more potential, but also some more risk. And the right has a lot of potential, but a lot of risk. And I think I do see that because the areas on the graph are bigger, the red and the green. Now there's also, at the very top of this, there's something that says trade, which is what I'm looking at, but there's another thing that says income.
Yeah.
What's the income tab about?
Yeah, we tend to find that options traders fall into 2 categories. You have traders who are looking to speculate on the directional view of a stock or ETF, and then you have more systematic traders that are looking to generate income. So one is not better than the other. It's a matter of what your preferences are and what's more important to your portfolio at the moment. And many traders will execute both types of strategies at the same time for different purposes. So the trading tab is specifically designed for when you have a directional view on the market, how can you potentially take advantage of that directional view? And income is less directional focused and more focused on just generating consistent income for your portfolio. And that's really taking advantage of that excess implied volatility that I'm referring to before that gives option sellers an advantage, a way to systematically trade that strategy in their portfolio and identify the setups that you can use to generate consistent income for your portfolio through selling a cash secured put and selling a covered call, or what is otherwise known as a wheel strategy.
Okay, so if I own a stock and I want to use options as a way to get money without having to sell the stock, the income tab's for me.
Exactly. There's 2 ways that you can use it. One, you can use it to acquire stocks that you are looking to buy using selling puts instead of placing a limit order. That gets paid. That pays you income to acquire that stock. I think that is the most underutilized option strategy by all equity investors.
And is that a safe? Is that, how risky is that kind of strategy?
It's less risk than placing a limit order, because what's happening is you have the same obligations as the limit order, but because you're getting paid income, that income that you collect actually decreases the total risk that you take compared to someone who's using the same limit order to buy the same stock at the same price. You actually have less risk using the short put than to place that limit order, which is why I think it is the #1 most underutilized option strategy by equity investors.
That's a great thing that probably a lot of equity investors just have no idea about.
Exactly.
Options just give you so much more flexibility. There's also kind of a grid down at the bottom of this, which catches my eye again. I'm a graphic guy. A bunch of different potential calls with red and blue. And one is checked. So I can explore different possibilities here?
You had asked a question before of what things do you look at before you place that options trade. And we tend to find that when a lot of traders migrate from equities to options, there are just a lot more things that you have to check that you may not even be aware of or think to check before you place your first options trade. And a good example of this is checking if there's an earnings date before the expiration date of your option, because that is a catalyst event that could potentially meaningfully change the P&L or the outcome of that particular trade prior to the expiration of that option contract. And it's important to understand whether there is an earnings announcement built into the contract or not to help you make your investment decision. So these are some of the things that we check for. We check to look for the OptionsPlay score, which is the expected value of the strategy. We look at earnings date. And another thing that we look at that I think most beginners either don't know how to look or don't even know to look for, which is liquidity. You know, as an equity trader these days, liquidity is not something that most retail traders have to worry about. And I would argue on the options side, most retail traders don't really have to worry about liquidity either, especially in the top 400 or 500 names. But if you're trading something that's past the first 400 or 500 in terms of market cap size, liquidity does tend to fall off from an options trading perspective. You can still get filled, but you got to work a little harder to get those fills. You have to be smarter about how you place your orders, what type of orders you place. So that's why we think it's really important for options traders before you place your trade to have these things checked for you, and that's what the strategy checklist does. And the check marks that you refer to are giving you a visual indication of how many things are checked off or how many things are working in your favor on that checklist without having to expand and look at the chart list, the checklist yourself.
Cool. And I like that there's also a lot of text in here that tells me exactly what we should expect in terms of income and return if we go this income route.
So we have the plain English explanation
Yes.
for both trading and income strategies. Actually, any strategy you structure within OptionsPlay, we have a plain English explanation for it. And that's specifically because there's a lot of technical jargon that's typically associated with options. And not everyone understands what each piece of that jargon means. So what we're trying to do is we're trying to take all of the important metrics that you need to know for an option strategy and present it to you in a plain English format so that you know exactly how much risk you're taking, how much potential you have to make on the trade, and what is the probability of that actually happening. Those are the central metrics that every options trader needs to understand before they execute their trade to better understand the potential outcomes.
Yeah, I see that there are Greeks on here, but I have to go look for them. I like that I'm not immediately hit with a whole bunch of Greek stuff.
Yeah.
Plain English is way better than plain Greek. So I'm back on the trade side of things, and yeah, there's below these wonderful graphs, there's P&L simulator, risk and investment calculator, trading range simulator, and plain English. Of course, I'm going to go to plain English, but when might I want to look at these other ones?
Yeah, the P&L simulator is probably one of the most useful tools because we're showing you 3 strategies side by side, and we're helping you progress as a trader from the more simple strategies to the more advanced strategies. The P&L simulator allows you to actually see how the 3 strategies perform side by side for any scenario that you have for the underlying stock. So in the example before, we were talking about if you were to buy a call option on Apple or if you versus buying the stock, you can simulate what happens if Apple rises by 5% between now and that expiration date, and we'll show you how those 2 strategies compare. And what if Apple goes 5% lower? How much do I have to risk? Arguably more important to actually understand the risk side than to understand the positive side, because I think a lot of traders miss that step. You know, you're so focused on, oh, I would like to make $5,000 on this trade, but how much are you risking to try to make those $5,000? That's what the P&L simulator is designed to help you better understand.
Yeah, there are 3 sliders, and I guess the top one lets you choose what the price might be doing.
Yes.
And so you move the top one to do that.
Exactly. So there are 3 inputs that you can have into the P&L simulator. One is the price, which is the factor that will have the biggest impact on your overall strategy. The second is time, which will have the second largest impact on your option strategy. And the third one is changes in implied volatility, which will have an effect, but relatively minor compared to the first 2. So that's why we have it sorted in those 3 orders of from what has the biggest impact on your options price to what has the lowest.
So you can just play what-if games all you want
Exactly.
and learn a whole lot. Now, there's another thing caught my eye was the trading range simulator. It's got a nice little bell curve-like graph, so yay, I like graphs. How does that one work?
So when you think about option strategies, if you think about the challenge with the P&L graph, is that it charts all the possibilities of what happens if the stock goes all the way to zero, or what happens if the stock goes all the way to infinity. And in theory, there's a payoff at every single point of that graph. But the reality is that there's an expiration date on your options strategy, and there's a realistic range that the stock can trade in between now and that expiration date. So if you have a $200 stock today, it's probably unrealistic to really consider what happens if the stock was to go to $10, or what happens if the stock were to go to 1,000, right? Even though those are still discrete points in the calculation, it's not something that you really have to factor in.
They're way out on the tail
Exactly.
of what's possible.
So what we're first trying to determine is what is the realistic range for this stock to trade in. And when we calculate our OptionsPlay score, the true risk-reward metric on your strategy, we're really looking at what are the possibilities within a reasonable range. And what that does is it avoids strategies that have unlimited potential or strategies that have unlimited risk. Because anything with unlimited potential or unlimited risk, you can't calculate a risk to reward metric for it. So that's why we use a reasonable trading range. We look at what are the possibilities within that range, and that's how we calculate a real P&L score for you using the OptionsPlay score.
Okay, when I move the sliders here on either the P&L simulator or the trading range simulator, am I going to change anything else in this, or is it just for that particular little piece of the tool?
Yeah, it's just for that little piece of the tool. It doesn't recalculate anything. It doesn't change anything. It basically is saying,
so I can play what if games all I want.
Exactly. You keep all things constant. What are the potential outcomes of my strategy?
And so the plain English then gives me 3 columns of English, yay. That's for each of these 3 graphs up above, right?
Correct.
And there's no change I can make that would alter that text or alter those graphs. Those graphs reflect the reality of the current situation.
But each of those graphs you can customize, meaning you can click on the modify button.
The modify button.
And you can change any of them. You can change how many contracts you're buying, you can change the expiration date, you can change the strike price, you can change the strategy. So it's incredibly flexible for those traders who do have more customized strategies they want to trade, or they have a particular preference on what expiration date, what strike price they want to choose. Any changes that you make there will reflect in real time within the P&L simulator, the plain English. Everything that you change, we will recalculate instantly on the OptionsPlay tool.
Okay, one last question. So I did just hit modify to see that. There's a big tempting blue button down at the bottom that says flip strategy. What does that do?
It basically reverses the strategy. So if you were trading, let's say, a long call, it'll flip it to a short call. If you have a long put, it'll flip it to a short put. It's designed for you to quickly modify more advanced strategies. A lot of times when you're trading advanced strategies like butterflies or condors, sometimes you just want to flip the strategy from either you believe implied volatility is going to expand to a strategy that you believe implied volatility is going to collapse. Or if you have a bullish strategy, it's going to flip it to a bearish strategy. So a lot of times when you're playing with more advanced strategies, you kind of have to move things around. You have to move all 4 legs at the same time. And we basically just built the button so that you click once and it flips all 4 at the same time.
And a lot of really, really good information and time saving.
That's exactly right.
Sounds awesome to me. Again, this is the OptionsPlay add-on for StockCharts, and highly recommended.